The September 2025 property market update. My name is Casey Taylor. I'm the host of the Tailored Property Wealth podcast. And in today's episode, we are talking about the data for the month of September as per Cotality. And it is starting to really shift in the property market space. The boom is coming. There is some very solid growth. It is heading up to the point where for September, it's the strongest month of growth since October 2023. So that is a jump for the month of 0.8%. And it's driven by the capital city momentum and also low listing levels, which we've discussed on the podcast before. So breaking it down, and this is the index as per the 30th of September 2025 as per Cotality, previously known as CoreLogic. September, Sydney rose 0.8%, Melbourne rose 0.5%, we had Brisbane at 1.2%, we had Adelaide at 0.9%, Perth at 1.6%, Hobart, it rose 0.1%, Darwin rose 1.7%, Canberra rose 0.7%. So the combined capitals rose 0.9% and combined regionals rose 0.7%, bringing that national to 0.8% growth. So a couple of those capital cities have performed very strongly. Brisbane doing 1.2%, which is well over a 10% growth annualized. Adelaide sitting at that 0.9, Perth jumping back up at 1.6. Darwin's still out in front, but we know Darwin's heavily influenced by a lot of the big movers going into that marketplace. Is it going to perform long term? It's not one that we focus on. So there's some pretty strong growth there. If we look at these figures on an annual basis now, and again, this is to 30th of September 2025, the annual growth over the last 12 months, Sydney has rose 3%, Melbourne 1.9%, Brisbane 8.8%, Adelaide 6.2%, Perth 7.5%, Hobart 2.7%, Darwin 12.9%, and Canberra sitting at 2.9%. So combined capitals 4.3% over the 12 months. Combined regionals did beat the capitals 6.6%, bringing the national growth to 4.8%. So there's some decent growth in some of these locations just as a city as a whole. And once you break it down to a suburb or LGA level of some of these areas, the growth has been a lot more than that. So if you could have purchased 12 months ago and you didn't, you've essentially lost money, and that trend is going to continue. If you can purchase right now and you don't, prices are going to be more in 3 months' time, 6 months' time, 12 months' time. You will have to borrow more money for the same asset. Nothing's changed with that asset. It's simply got more expensive. Listing levels is a big factor as to why there's so much pressure. There's obviously the decreasing rates, which is spurred along everything else, but what we're also seeing is what's now taken effect is the Home Buyers Grant, effective on the 1st of October, with a lot of those cap rates increasing across the metro locations. And that has really fueled a big spike in demand and just people wanting to pay more for property. There is that pressure there already with those announcements. People rushing in before the 1st of October. And now the active demand for that will continue and start as well. So yeah, this is the strongest growth on a national level since October 23. It's pretty powerful. Perth and Brisbane ahead, being the larger capital cities. Values are up 4% and 3.5% respectively for the September quarter. So if you're looking at that September data, it is quite strong. All right. So the number of homes for sale at the end of September was about 53% lower on average in Darwin, 45% below average in Perth, and 31% below in Brisbane. So that just really shows how low that supply is in some of those marketplaces. We're definitely seeing that across Brisbane. It is just tight stock at the moment. And when you're trying to then find that quality stock on top of it, it is challenging. And when then you're trying to get a good price on top of it, it is challenging. So if you want to purchase, you need to get in now, because it's going to take time to stick to the quality, not lowering your expectations of the property to be able to get in. So over the 4 weeks to September 28th, capital city listings tracked about 18% below the previous 5-year average. Meanwhile, estimates of sales activity through the September quarter was 7.3% above the previous 5-year average. That's about it for this month's property market update. It's a nice quick one. It shows the performance of where the market's at, what it's doing, and what we expect moving forward. It's not slowing down. If you think that the property market is going to correct and you can get a fucking bargain in 3 months' time, you are wrong. You will make a mistake and it will cost you money. Finding the solution in your budget, getting into the marketplace, getting that time in the market is going to help you build wealth if you want to create financial freedom. If you want help in purchasing your next investment property, reach out to us. We can book in a discovery call. We can see if you might be the ideal client we want to work with. We have limited spots each month. We do not work with everyone, so that call will identify that. Thanks for listening today. Hope you enjoyed, and we'll see you on the next one.